So let's just get right into it. How is it possible that the most exciting, most hyped technology on the planet, one valued at trillions of dollars, is actually built on a business model that is hemorrhaging money? It's the great paradox of our time. Welcome to the AI bubble, where the numbers just don't add up and everybody is terrified of being the first person to stop the music.
And really, this whole thing, it kicks off with a bombshell quote. This is from Sam Altman, the CEO of OpenAI, the company behind ChatGPT. He just casually admits that even on their paid, premium product, they're losing money. Think about that for a second. The more people pay them, the more cash they burn. This single, mind-boggling statement is the key to understanding everything that's happening. So how on earth did we get here?
Well, the story starts not with some genius business strategy, but with something a lot more primal. Just raw panic, a wave of it that washed over Silicon Valley back in the winter of 2022.
Okay, so cast your mind back to late 2022. OpenAI just drops ChatGPT on the world, and it's like a lightning strike. I mean, look at these numbers. 1 million users in 5 days, 100 million in 2 months. That's just not normal. Nothing moves that fast.
And just to give you a sense of how insane that is, remember Instagram? It felt like it exploded overnight, right? Well, it took them 2.5 years to get to the number ChatGPT hit in 60 days. Facebook took even longer. This wasn't just another app launch. It was a fundamental shift, and it sent an earthquake through the entire tech world.
And you know who felt that earthquake the most? Google. See, here's the crazy part. Google had this tech. They'd been working on it for years, developing the very same ideas, but they were just too scared to release it. They were worried about the AI saying something offensive, getting them sued, or just a bad PR. They were playing it safe.
And you can just feel the frustration in this quote, which captures the mood inside Google perfectly. Imagine being that Google engineer. You literally invented the core technology, you wrote the papers, and now your own kid is at home using the competitor's product. A tiny startup was eating their lunch and they knew they had to do something and do it now.
So that panic inside Google, it wasn't just them. It rippled out and hit the entire venture capital world. And suddenly, it was a full-blown gold rush. All the rules went out the window. And I mean, things got ridiculous, fast. You just had to sprinkle a few magic words into your pitch deck. Neural networks, here's some cash. Large language models, take our money. It didn't matter if you had a product. It didn't even matter if you had revenue. AI-powered toothbrushes, AI for summarizing other AIs, everything got funded. The whole thing was just pure, unfiltered main.
So a really important question here is, where was all this money actually going? And the answer, for the most part, comes down to 3 letters. GPU, graphics processing units. Think of these things as the super-powered computer chips, the engines that make all of AI run, and almost overnight, they became more valuable than gold.
Now, when you look at the price tag for just one of these chips, you might think, okay, $3 an hour. That doesn't sound so bad, right? Seems pretty reasonable for one of the most powerful things ever built. Wrong. Because here's the thing, you don't rent one GPU. To compete, a startup needs a whole army of them, hundreds, thousands, running all day, every day. And suddenly that tiny $3 hourly rate explodes into over $1 million a month. That's the insane cost of just having a seat at the table. And that right there, that astronomical cost, brings us to the really ugly part of this story, the math. And believe me, the math is, well, it's not pretty. In fact, it's terrifying.
So let's go back to the leader of the pack, OpenAI. In 2024, they made $3.7 billion in revenue. That's amazing, right? But they lost $5 billion. Let that sink in. They didn't just not make a profit. They spent every dollar they made and then burned another $1.5 billion on top of it. The whole model is upside down.
And this isn't just an OpenAI problem. It's the whole industry. To justify the trillions being invested, the entire AI industry has to basically 10x its revenue in just a few years. We're talking going from $200 billion today to $2 trillion by 2030. That's not just growth, that's a miracle. And you get the sense that even the people on the inside know how crazy this sounds. This quote just says it all. It's what one investor supposedly said to Sam Altman, a hockey stick drawn by someone who's never played hockey. It's a perfect way to put it. These aren't business projections. They're basically wishful thinking on a massive scale.
Okay, so this is the part where you're probably scratching your head. If the numbers are this bad, if the growth you need is basically impossible, why hasn't this whole thing just imploded yet? Why does the bubble keep getting bigger?
right? I mean, the losses are mind-boggling, the valuations are completely detached from reality. So why isn't it popping? In any other industry, this would have been over already. Investors would have run for the hills.
Well, the answer is pretty simple, actually. It's all about who is footing the bill. See, this isn't like the dot-com bubble. This time, the money isn't coming from a bunch of hopeful venture capitalists. It's coming from the biggest, most profitable companies on the planet. Microsoft, Google, Meta, and Amazon, who are printing money from their other businesses.
And this poker analogy is perfect. You've got these four giants at the table, and they've all shown up with basically unlimited chips. They're not playing to win a few pots. They're playing to not get knocked out of the game entirely. It's not about profit. It's about survival. They are terrified of being the one who folds and then watching AI change the world without them. So they just keep raising the stakes.
But here's the thing. Nothing lasts forever, especially not bubbles. The laws of economic gravity always win in the end. So if these guys won't stop spending on their own, what could actually force this whole thing to come to an end?
Well, if you look back at history, bubbles tend to pop for one of two reasons. First, the money just dries up. Interest rates go up, capital gets expensive, and the party stops. Or, the second way, you get a huge, embarrassing public failure. Think of it like the FTX of AI. One big, spectacular collapse that makes everyone suddenly lose their nerve all at once.
Which brings us to the final and most important question. We've seen the hype, we've seen the panic, we've seen the ugly math, and the forces propping it all up. Where are we in this story today?
Honestly, we're in this weird, tense holding pattern. The big tech money is still pouring in, so the bubble keeps floating. But the cracks are there. You can see them. The massive losses, the weird AI mistakes, the lawsuits, everyone sees them. But for now, nobody's decided they're big enough to panic about. Not yet. And that final quote just nails it. We're not at the bang. We're in the silence right before it. That deep breath everyone takes before the scream. It's that feeling, that incredible tension, right before something has to snap. And we're all just waiting to see what happens next.